This training video is going to help us cover how do we handle our money in Mary Kay. I think it's crucial, one, because of my background of being an accountant, that you know well how your money comes in and goes out. So the first piece of advice that I give you, number one, write this down on a piece of paper, is go to a bank that has free checking account and open a personal checking account. You will get on your checks your name and your address, and that's it. You will not put on it anywhere Mary Kay. You will not get a business account. Those cost money. This is just another personal checking account for you, and go somewhere where it's free. The second thing is get a debit card associated with that checking account, because in Mary Kay we can place all of our product orders online. And so when you have that 16-digit number, Visa, MasterCard affiliated, makes it simple to place your order online. Now, how do we work our money in Mary Kay? I'm going to have you take your piece of paper and flip it over, and I'm going to have you draw a large triangle on your piece of paper. Draw a large triangle. Okay? At the very top of the triangle, I'm going to have you write the word inventory. In the lower left-hand corner, I want you to write product account. And in the lower right-hand corner, I want you to write profit account. It's so simple. Our money is a triangle process in Mary Kay. So whether you're a money person or not, I want you to know this is simple. And I'm going to teach you an easy way to track it, so that way you keep your business money separate from your, personal money. So you have a separate checking account. Here's your money. So right underneath product account, I want you to write 60%. Because how Mary Kay has taught us to set up our business is anytime we sell something, say we sell $100 that week, 60% of that goes back to replace the products that we sold, and then any other samples or books that we might need to go with it. And then 40% is the number that you write under profit account. And then the remainder of that, 40%, becomes our profit. So if we sell $100 in a week, we take $60 and invest it right back in to replace the products that we just sold, because we can't let our store go empty. Just think if we were, a grocery store and we had all these apples. It's fall and I love Honeycrisp apples right now. I buy all their Honeycrisp apples like I just did this week, and then they don't replace them. What happens when I go in next week to buy some more? They're going to lose my service because they didn't restock their inventory. So that's what the 60% is doing. It's restocking, re-putting the products back on your shelf that you have sold. Does that make sense? Mm-hmm. Restock? Okay, great. The 40% becomes your profit. Your profit is whatever you want to do with it. Your profit can be shopping money or grocery money or a vacation fund, whatever you need it to be. But the first thing that profit account does is it goes back to pay off your initial inventory if you borrowed that money from some source. So if you started your business with an inventory package, whether it was $600, $1,200, $1,800, $2,400, $3,000, $36, it continues to go up. If you started with one of those inventory packages, you might have either put it on a credit card, you might have either borrowed it from a bank and took out a small loan, you might have borrowed it from your parents, or maybe you took it from your savings account. Whatever way, doesn't matter, but I want to help you immediately replace that money wherever it came from and then get you on a clean profit basis. Make sense? Mm-hmm. So at the beginning here, if you borrowed money from another place, I'm going to ask that you take your 40% profit and not go shopping. I'm going to ask that you take that 40% and pay off your inventory. Okay? Are you following me so far? Mm-hmm. Okay, great. So when you sell product out of the product account, 60% of it, we've got to put money back in to replace the inventory. So I want you just to draw an arrow that goes back up. All right? And then 40%, our profit, we're going to either pay off our initial investment or it's profit. Make sense? But that's going to, in turn, you know, pay off the initial inventory, draw an arrow, point it to the inventory, or else we're going to keep it as product. So let's do an example. Let's write right in the middle of the triangle, money bag. This is your Mary Kay money bag. And we're just going to use the example of a $500 week because if you kick off your business with a grand opening, you know, that's an average place that you'll land is a $500 week. So if you sold $500 and 60% of it needs to go back into your product to replace what you've sold, who can tell me what $500 times 60% is? You can use your calculator. It's fine. You got it, Megan? $300. $300. Great job. So $300 is going to be ordered into Mary Kay to replace the products that we just sold at the grand opening. Does that make sense? So we set $300 aside to place our next order. And then what's left is the 40%. If you take 40% times 500, that's $200. It's the remainder. $200 is now profit. Or $200 is now what we can immediately put back to replace our initial investment. Okay? Now you do that 3, 4, 5, 6, 7, 8 weeks in a row, and that initial investment's then going to be paid for. And then you get to start taking that 40% and use it as profit and use it for whatever you wanted to do it for. So there'll be other times in your career while all of a sudden you are just selling product and you just don't have enough on your shelf. You're just constantly running out. That may also be another time when you're like, you know what, I maybe need to take my profits from this week and reinvest it back into product so that way I can increase my inventory and grow it to a little higher level. I've done that many, many times in my business. You know, I may have started with a 1,200 inventory, but currently on my shelf I have about a $10,000 inventory. So there's been multiple times where I'm like, whoa, I need more cleansers and moisturizers. Wow, I need more repair. This has come out. And just for that week, or just for that 2 weeks, I didn't take any profit, but I just invested it back into product so I could have the inventory that I needed to service my customers. Make sense? Mm-hmm. Okay, that's your little visual. Now we're just going to do it like a checkbook. So you can flip your piece of paper over. This is a Mary Kay business tracking register. You'll find it on my website. It's under the new consultant link, or it's under training and then the management stuff, the time management and the business management stuff. So, but you'll find it under the new consultant, you know, link. So this is so good, and this is nothing from the company. It's just something that I made up. So it's just my accounting brain dumping out on paper to try to make this make sense for you. So we're going to write it out so this kind of looks exactly like your checkbook. So under previous month balances, right here in this white box, right here, we've just had your grand opening and you've sold $500. And so if this was your checkbook register, we would write deposit. So we're just going to write deposit or week 1 deposit, whatever you want. And then in the gray box right next to it, we're going to write $500. Now this column will always match the amount in your checkbook. All this worksheet is doing is breaking it down into a couple of categories so you know how to spend each category. All right? So if I were, and in this worksheet, what I do, instead of a 60-40 split, I have broken the 60% up into 50% in inventory, which is Section 1 products, and 10% in Section 2 products, which is our sales aids and our demos, or our preferred customer program mailing of the lookbook, or events that we go to. We register for different events And so that fund builds up to have money for our events. So those first two columns, right here, column 1 and column 2, actually add up together 50% and 10% to make our 60% column that I was just referring to on our triangle. And then in the last column, that's our 40% column, which is our profit. Okay? So if we had a $500 week, we have wrote that down in the gray column, and then under inventory, I'm going to times, and just look at the top, it says take column 1 and times it by 50%. So half of $500 is $250. So we're going to write 250 needs to go back into product. 10% of 500 is $50. So you're going to have $50 now for lookbooks, for Section 2 samples, you know, to do your next lookbook mailer, you know, at 70 cents a name, you're going to have that money set aside. And then your profit is 40%. That's $200. Now on this little worksheet, I do it so you can add it to your previous balance. Of course, our beginning balance was 0, you know, so we'd have zeros all the way across here. You just opened your Mary Kay account. So on this gray line, which is a plus and minus, it's just your addition line. Since we're adding all of these to zeros, you know, our beginning balances, we actually carry all these numbers just down one line. So 0 plus 500 is 500. 0 plus 250 is 250. 0 plus 50, 50. And 0 plus 200 is 200. Okay, that's just our math line. Okay, now what happens the second week in our business? So maybe you did a class and sold 300, and maybe you did a facial and sold 100. So you have $400. How I've always worked my business is I go to the bank once a week. You know, whether it's Friday or Saturday or wherever your week goes, you know, I take all my checks, take all my cash, I go at the end of the week and I deposit it into my Mary Kay account. So week 2, we're making a deposit and it's going to be $400. So write that down on the next white line. It's a deposit from week 2, $400. Now we're going to do the math. 400 times 50% is 200. 400 times 10% is 40. 400 times 40% is 160. Now add up the last two lines. We're continually adding the last two lines together to see what's in our checkbook, so we know the exact balance. And if you did the math right, you should have came across with 900, 450, 90, and 360. All right? So now that says, wow, you know, I look in my Mary Kay checkbook and I have $900. And you're thinking, wow, I have $900. But really, what you have is $450 that you can place a Mary Kay product order with. $90 for business supplies, events, or your lookbook mailer. And $360 that's profit. Okay? So that way you don't get all excited of, oh my gosh, I've got $900 in my Mary Kay checkbook. Let's go take a vacation. You know, if you do that, you're going to run out of products and then you're embezzling from your business. So this little worksheet, you know, you can even fold it up and keep it in your money bag right along with your checkbook. So that way, you know, when you, well, let's do one more example. So now let's say you've sold $900 worth of products. You're going to need to reorder. So on the next white line, let's write order products for Mary Kay. We're going to place an order. And, you know, we can order 450 in Section 1 products, and we can order up to $90 in Section 2 products. So let's say, oh, we need every single penny of product, so we're going to order 450 in product. So I want you to put 450, but I want you to put it in parentheses, or a minus, however you want to do it. And we don't need $90 quite of Section 2 stuff yet, but we do need $50. So put $50 in parentheses or subtract it. And, you know, since we're ordering from Mary Kay, nothing is happening in that last column. You know, we're not taking any profit when we're placing an order. So do the math. Carry the numbers down. 450 minus 450 is 0. 90 minus 50 is 40. And then your profit number just carries down. It's still 360. And then your checkbook balance in your gray column should have dropped. It was 900. You just ordered $500. Yep, $500 was the total cost of your order. So you put, yep, and then you subtract it down, and now you have $400 left in your checkbook. So the way the worksheet works is that these three columns should always add up and equal the number in the gray box. Because all we're doing is taking the number in the gray box and dividing it into 3 percentages. So the gray box, this column, it should always be exactly what's in your checkbook. Okay? So all we're doing is just taking the amount that's in the checkbook and dividing it into 3 categories to make you great business women. So that way you don't overspend, in too much profit. You don't overspend in ordering too many products. You balance your money. Make sense?
Can I show that to the?
Great.
Show that to the
Yes,
I think that would be
absolutely. So that way it's closer so we can see it on the video. So this sheet is just a fabulous way for you to be able to, break down your checkbook so you know exactly what you're able to spend and exactly what you can take in product. And so my encouragement for you is wherever you started your business, if you borrowed from another source, pay that back. And you pay that back by taking all of your profit, that 40% amount, and paying it back. Girls, and maybe you need some profit right now, but you need to pay that back as well. Then fine, cut it in half. So in this example, we're showing $360 is sitting in our profit account right now. Fine, then take $180 and go show your husband, here's my profit so far in Mary Kay. What do we want to do with this? And then take the other $180 and pay it back to pay off your investment. Make sense? All right.
Do you have an electronic version of this?
I do have an electronic version. It is an Excel file, and so if you have Excel, all you have to do is punch your number in, and the formulas calculate everything for you, and you don't have to figure anything else. I've done it multiple ways, and in the Excel version, then there's one other column over here that says initial business investment. And maybe you started your business with $2,400. And so then it even has a column of when you move money over here and subtract $360, you know exactly when your initial, investment is paid off. So I have an Excel version, or you can have a paper version and just keep it right there with your checkbook, right there in your money bag. You get a money bag as one of your new consultant prizes, and it's so wonderful because it has an inside zipper where you can keep, some change for petty cash, some 1s, some 5s, some 10s, a 20. And then you've got 2 compartments. And I just keep on the one side, my business tracker sheet and my checkbook. And then on the other side, if when I go out and do a class, I've got a place to put the pink tickets, I got a place to put the profile cards, I got a place to put the checks and the cash and anything that they give me. So when I leave, all of my financial stuff is right there in that money bag. So it's a great, great, great way to keep organized. Also relating to money, sales tax. We briefly asked this question before we started. Right now, currently in Indiana, sales tax is 7%. So anytime you sell something, say we sell $100, then you times that, on the calculator by 0.07, and that is an additional $7. And so they would actually pay you $107. And that would be the amount of the sale. Okay? They write out their check to you, to my name, Linda Gates, if I sold it to them, and then it's $107. And then sales tax becomes a wash in our Mary Kay business. Because when we order our products up front from Mary Kay, we pay Mary Kay the sales tax. And then they file all the forms with the government. So then when we sell those products to our customers, we put the 7% sales tax back on it, and we get our money back. But now I don't have any paperwork that I have to do with the state of Indiana or whatever state you might live in. So it's wonderful. So a great question that people often ask about, well, I want to give a discount, but how does that work with the tax? Do I, figure the tax and then discount 20%? Or, how does it work? If it was a $100 sale then a 20% discount would be $20. So they would pay me $80 instead of $100, but I still figure the sales tax on the $100 because that's what I paid. So 100 times 7% is $7. So they'll pay me $80 plus the full amount of the tax, which is $7. So they'll write me a check for $87. Does that make sense?
Mm-hmm.
I know it can be confusing, and you can do it the other way. You can just say, okay, her bill was 107, and now what's 20% of that? You know, and you'll get a slightly different amount, but you're just actually losing, you know, a few pennies of that sales tax money that you already paid for it. So totally up to you, but I just always get my sales tax money back, and I just discount the product.
Okay.
Okay? Make sense?
When you say you can do the $107 and then the times 20 or .20,
Yep.
how are you losing money?
Because then I'm discounting the sales tax by 20% as well.
Okay. Okay.
Make sense?
Yeah.
Yeah. So, and it's not much because 7% of $20 would be $1.40. So I'm
That
losing
adds up.
$1.40, but it adds up. And so whenever I discount the products, I discount the amount of the product, but I always put the sales tax on the original value. Another financial thing that goes right along with this is ProPay. ProPay is an outside company that Mary Kay has given us to use as a vehicle to process MasterCard, Visa, Discover, American Express. It's wonderful. It costs $39 a year, and you can pay it all at once, or you can process it on 3 different payments. So it would be $13, $13, $13, something like that. ProPay is set up so beautifully that they give you a pink card that goes right along with it. So once I process somebody's credit card, that money immediately goes on that debit card that they give me. So I have a complete I could literally I could process the card and literally go to Walmart and run that pink card that they give me, and I'd have those funds. Or you can transfer the funds, you know, to your checking account, or transfer the funds to your savings account. I kind of just use my ProPay as like my travel fund, because for Mary Kay, we go to so many different, you know, venues, whether it's seminar or leadership or career conference, where I might, you know, have a registration fee or a plane ticket or a hotel expense. And so I just kind of let my money sit there and build up, and then when I have to travel, man, I've got a nice amount, you know, already set up. Totally up to you however you want to do it. You could move that ProPay money over, you know, immediately to your checkbook every time, you know, it clears. So your choice, but I would highly recommend it. Most of my customers pay with debit card or credit cards, you know. You don't have to start with it, you know, you can just tell them you don't have that set up yet. Is there any way they could write you a personal check or give you cash? But if they say, that's all I have with me, then just take the number down and the expiration date, and then you can always add your ProPay at that time.
So you go online,
Yeah.
even though you are giving them the product right then and there?
Yep.
Okay.
You go online. And what's so nice is with every smartphone that we have out now, you can even get a card reader. It's just a little jack that plugs in to your phone, and you can even swipe their card right there on your smartphone at a skincare class. So if you want to get the jack that goes right along with the ProPay service, then you don't have to go online and enter their information. You can swipe the card right there at the class.
When you sign up to do ProPay, the 13,
Yes.
will it send you an email and tell you when your next payment is, or is that something you need to keep a track of?
Great question. I believe that it will just bill it monthly to whatever card number that you put in there to charge it to.
Okay.
So if you're putting in a debit card or a MasterCard or Visa, you know, just on a monthly basis for 3 months in a row, it's going to take out that $13.
And it's only $30 a year.
Or, you know, you add it up, I think it's $39.
Okay.
$39 a year. So do it all at once or break it up into 3
But we
payments.
could wait to do it until someone,
Absolutely. Wait to do
Just
it until
wait.
somebody
Okay.
asks, do you accept MasterCard or Visa? And then say, yes, absolutely. And then just write down their card number and the expiration date.
Okay.
We don't need in Mary Kay the 3-digit code on the back. We just need the 16-digit number and the expiration date. And you need to know if it's a MasterCard, Visa, or Discover.
Okay.
And just a great little trick is if it starts with a 4, it's a Visa. If it starts with a 5, it's a MasterCard. And if it starts with a 6, it's a Discover. So if you forget to ask somebody, because you can't process it without clicking the right box, was it a Discover, a Visa, or a MasterCard? So a 4 is a Visa, a 5 is a MasterCard, and a 6 is a Discover. All right?
Do you want to cover the fee each time that you process a card?
Yes,
There's a
thank
fee.
you.
Yeah.
So with ProPay, of course, when you process a credit card, we lose a teeny tiny amount in the processing fee. I believe it's like 3.25. It's a tiny percent. So out of a $100 sale, I'm going to lose $3 and something to process that credit card. But out of a $100 sale, I just made $50 profit. So is it worth it for me to lose $3 and make $47 profit for them to have the convenience of using their debit card? Absolutely. With the way that technology in the world is going, a lot of people go to these home parties and they don't even carry their checkbook. They don't even carry cash. They walk in with a tiny little, keychain or a tiny little wallet, and they just pull out their debit card, and that's all they have. So yes, there is a tiny little fee that goes along with it, but our fee with this ProPay is much lower than with a lot of other companies' credit card processing services. You don't have to use ProPay. You can go out there and research and find some other credit card processing service, but I don't think you'll beat the 3%, processing fee. You'll find that they're 5 and 6 and 7%.
I believe the ProPay fee is 30 cents per transaction
Yes.
plus like 2.69% of the amount that you process.
Awesome.
So it's
Because
lower.
you
It's
just
gotten
looked that
lower.
up.
Yeah, I had to
Okay.
find some details on that. So
So for every transaction you process, it's 30
30
cents. And then it wasn't the 325, I thought. It's gotten lower.
Yeah.
It's 0.269.
2.69%, I believe.
2.69. So out of $100, you lose $2.69 plus the 30 cents, which is $2.99. So just think of it in your mind as, 3%. So that is a, fabulous thing to do to help you, grow your business, and it's a minimal cost. Are you thinking anything else financial I'm forgetting for this training session? Any other questions that you guys have on managing your money, balancing your checkbook, keeping your funds separate? It's so wonderful to have a debit card because, you've got $900 sitting in your, checking account now, and now you go online to Mary Kay, click to place an order, and then you just enter your debit card number and the money's coming right out. So I just can't stress enough for tax purposes why you want to keep your Mary Kay funds separate from your personal funds. And it's never too late, So you girls are brand new, so start from the beginning and open a separate checking account. But if you haven't done it, it doesn't matter. Start now. Even a couple years into your business, it just keeps it clean.
When you sign up for ProPay, because I already have, but I didn't have my Mary Kay checking account set up yet, so I didn't have my card number. So I entered in, I paid with my other checking account. Is that the number or the card that they'll bill and send my, because I've entered a transaction, is that the card that they put that transaction on then, since I don't have a pink card?
No.
Or how will that?
That money is probably just sitting in the ProPay account until you tell it where you want it to go.
Okay.
And so you'll be able to go back online into your ProPay account, and when you want to transfer the funds to your Mary Kay checkbook, now that it's set up, you can enter your routing number and your checking account number and move those funds right over.
Okay.
Yep, great question.
what do we need to save for the end of the year for tax purposes?
Yep. every receipt that relates to your Mary Kay business.
So every pink slip?
Yep.
Okay,
So,
like I have this.
yes, you did exactly
know.
what I showed you.
Okay.
So this is great. So, you sell an item and you write out your pink ticket. At the end of the week, you take your weekly accomplishments sheet and you summarize what you sold. So right here is a sale of a mineral eye color bundle, so $21. So she recapped the name, one order, it was an on-the-go appointment, and alls that we do differently
I just
is,
didn't know how to fill
right
it out.
here, it's $21.
Okay.
It's the amount of the sale, $21. And then if you had other pink tickets, you'd list them. The amount of the sales goes right here in this sales section, and then you add them all up, and at the end of the week, there's your total, $21.
Now, there's an online version of that, right?
There is an online version of this, so you can do the hard paper copy. This is a great way to back up your receipt, so if you're ever audited, you've got your paperwork of what you sold, and then it's recapped on what you sold every week, and then you can add it up in the corner so you know what you've sold, ongoing throughout the year.
But for taxes purposes, it's good to have the hard copy, even if you do it on the computer, to print it out.
If you do it on the computer, you don't need to have this, that's the same thing, but you need to have all these.
Okay.
Yep,
And you can print the version that you do on the computer. I mean, you can say,
yes.
you know,
You
print me a
fill,
copy.
you fill all
Yeah.
this out, and you
Yep.
can just print it out, and then you can staple it right to this, so then you have all your backup. That's what I would do, one way or the other, you need to have proof of this.
What about orders that people make through your website and that are shipped directly to them, so you don't, are you sent a
Pink
slip?
ticket?
Yeah.
So you can print one off
Okay.
right from that
They'll have-
website.
okay.
It gives you one of the options down here, do you wanna print this invoice? So if so, go ahead and print
And
it.
that cost
Or-
price is that?
Yep,
Okay,
or if not, just handwrite it out on your own pink ticket, it doesn't matter. Just so you have recorded everything that you've sold.
okay.
If we don't print out the computer version of this,
Mhm.
can we go back, is there any way to go back later?
Oh,
and
yeah.
Print it out later?
Yeah, absolutely. The company keeps it for quite some time. So if you've been in for a couple weeks, but you haven't printed out the last couple weeks, you can go in. It is on your Mary Kay InTouch webpage. You go over to the second column, which is Business Tools, and you go all the way down to the bottom.
Okay.
Weekly accomplishment sheet. And when you enter your numbers online there, not only do you have it for your own records and you can print out this as a hard copy, but then those numbers are automatically sent to your director. And then your director knows exactly what you've done that week as well. So it's a great way, to communicate with your director and do your paperwork all at one time.
Does the company send you a W-2?
You're gonna find at the end of the year, if you sell a boatload, they're gonna send you a statement showing what you've sold and what you've ordered. If you are just more of a hobby level or part-time, you're not gonna see anything from the company.
Okay, this is our proof.
That is your
That's-
proof.
Okay.
But to go back to your other question, what do I need to save for taxes? Every invoice that comes in your Mary Kay boxes, those are your receipts of what you purchased. You need to save all of your pink tickets of what you've sold and the weekly accomplishment sheet that supports it. We abbreviate this WAS, Weekly Accomplishment Sheet. So that's a cute abbreviation for this sheet. And then you will save every receipt that relates to your business. If you go to Walmart and buy cotton balls, if headbands, save the receipt. If you go to the office supply store and buy postcards or invites, or you go to the post office and you buy stamps, or you mail packages at the post office, save all your post, receipts. You just think of it. If it relates to your business, you save the receipt. And then I've got a couple great worksheets also on the webpage that show you at the end of the year where every single number goes. And what you're gonna do is what's called a Schedule C. It is profit or loss statement on your business. It's called a Schedule C, and it will just take all of the Mary Kay numbers, put it on this Schedule C. At the very bottom of it, we'll either get a profit number or a loss number, and then that is transferred over to your main tax form.
So if you have a loss, does that mean that you're going to have to pay at the end of the year?
No.
Okay.
Actually, you know, the IRS will tell you the first 3 to 5 years of startup in a business, you should have a loss.
I was gonna say,
You
with
should
us
have
starting
more,
so
yeah, you should have more
late in the year.
expenses than you do, you know, profit. So it's fine to be showing a loss the first couple of years. And then you may buy a computer, or you may buy some shelving units, you know, something to store your inventory. You may make bigger purchases, you know, that's just fine. So, but after about the 3rd, 4th, or 5th year in business, you should be showing a profit. But does it hurt you? You know, so say that bottom number on your Schedule C is negative. You took a loss of $500 or $1,000. We transfer that over to your 1040, you know, your tax form, and whatever you and your husband made together throughout the year, you know, that's what the amount that you're taxed on. But then we take your business and, oh, you lost $1,000. And so we subtract that from your income, and now this is the new amount that you're taxed on. That's why owning an in-home business becomes such a tax incentive, because for the first 3 to 5 years, you're probably going to have a loss. So it's going to help you, you know, on your personal taxes, you know, to not be taxed as much, not be taxed as hard. Great. Any other questions?
Now,
Been good.
something I'm kind of learning here,
Okay, great.
and I've never done, is can you write off the processing card or the,
Yes.
The
so that fee,
$2.99.
yes. So that 30 cents and the
On your taxes?
yes, at .269, you save. And what's so nice about ProPay is they do a report for you at the end of the year. And you can just
Okay.
go to that year-end report, they'll total it, tell you what the total amount of processing fees are, and that's something that you can reclaim as one of your expenses of your business and put it on your Schedule C.
okay.
All kinds of, because that's an expense of the
It is,
business.
yeah, right, and that adds up.
Yeah, to do the ProPay, that $39, that would be recovered on your taxes, you know,
same
as an
like
expense.
the amount for the website.
Exactly, you take out a new website for $25, that's a business expense. So we get to include that on your taxes, you know,
Okay, I don't know how to do taxes because I've never filed taxes.
well, that's all right.
That I know, I mean, Dad might have had me sign a paper that
Right.
was filing taxes. So, anything that you spend on your business, you can file off of your taxes?
Yes, you just
Okay.
have to save the receipt.
Okay.
You just
That's
have
why
to
it's
have
so
proof.
nice to have your Mary Kay checking, because then everything is right there.
Yep.
I mean, for the first couple of years, let's be honest, I'm gonna say, here, Dad, I don't know what to do with this, show me. But other than that, because I don't know anything about taxes
Yeah,
right now.
I can't stress enough, and even when you travel, oh my gosh, this becomes such a tax benefit. Because if my sister-in-law lives in Ohio, and I go to see her, and I do a Mary Kay party there, and, you know, sell over $300, there are stipulations that when you go on a trip, you have to sell at least, you know, $50 a day, or you have to recruit somebody, add a new team member. But if that happens, say I'm gone for, you know, 6 days, you know, I need to sell at least $300 while I'm gone, or added a new team member. Well, when that happens, now the round trip mileage all the way to Ohio and back, you know, I can take that as a tax deduction. You know, the meals that I ate out, you know, while working business, you know, I put the reason while I ate out, and that can be deducted as an expense of my business. Now, you have to be out of town. So, you know, in-town stuff doesn't count on your taxes. You have to be out of town. But, you know, we get together for a Mary Kay meeting, and we go up to the Pottery Place like we just did for our Star Consultant party, and we went and grabbed dinner afterwards. You know, talk Mary Kay the whole time. You know, that is a business expense. So we save the receipt from dinner and just write on the top of it, you know, and receipts are so wonderful because it says the name of the restaurant, it says the date, you know, so all you have to do is write on top of it, was it an interview, was it a training session, was it a meeting, you know, document why you're there, and then you get to use that food expense on your taxes. Now, you don't get the whole thing, you know, the government only lets you have a portion of it, but that's all right because my food receipts add up as much traveling that I do. Yeah.
You said it has to be out of town, so that includes like the mileage, like I don't need to track my mileage from Huntington University to here.
No, that is different. Your mileage for your business is everywhere you go. So the first thing you want to do is write down your odometer. And a great way to do this is go have an oil check. Because if you get your oil changed, you have an official document from an outside source that says what your odometer reading was. If not, walk into, your oil place and say, I need my, odometer documented, and have somebody sign off on it. And then, I just keep a little tablet. And when I drive from home to here, I write down my beginning and end odometer and keep track of my round trip mileage. And then at the end of the year, the government lets us take, it's up to like 55 or 60 cents, per mile. It changes every year. So I'll end up with 10,000 miles. Well, you take that times, we'll just say 50 cents. Well, that's $5,000 that I get to deduct off of my profit that I made as a business expense that takes the amount that I'm taxed on way down.
Wow.
Wow. And the higher you get in the company, you can take things like your cell phone bill, but you have to document that you're doing a certain level of business before you can, take some of those fringe benefits. So, it's crazy. For every face that you do, you can even document the washing of washcloths and get money, back on your taxes for every face that you do. So that's why if you fill this out completely, all the information that we need to do your taxes at the end of the year, comes from these summaries. So I can't stress enough, start at the beginning, write your receipts, and then summarize them per week on the weekly accomplishment sheet. At the end of the year, you'll have 52 of these if you were in the whole year. Even if the week is 0, take one and do 0. So that way you're not missing one. Know what your week is, and then it just makes it so simple at the end of the year. And we have Mary Kay Tax Specialist that you can literally take all these things, fill in the workbooks, and they will do your Schedule C for you for $50. So if you just are like, I am not comfortable with this, I don't know how to do it at all, I don't do mine anymore, and I'm an accountant. Because it's big, it's crazy, free cars, and it's crazy. So I just send it off, and they do it for me for $50. Great questions.
And then that sheet, then I would give to my,
And then you take the Schedule C that they send you back, and then whoever does you and your husband's taxes, you say, and here's the Schedule C for my Mary Kay business. I've already had this done from a specialist.
okay.
And so then they just add that to your, it's wonderful. It's wonderful.
Yeah.
So, since I'm still filing under my parents,
Yes.
does it deduct off of their taxes then, or?
We'll just have to wait and see. We've only got a couple months till the end of the year in
Right.
your situation. So we'll have to just wait and see, how much you sell by the end of the year to see what is the best way to go.
Okay.
Whether, they would advise that you file separately this year because you have this little, business on the side, or what. So
Okay.
that's a great question for, a tax accountant.
Okay.
Great. Awesome. Well, that wraps up our money management training.